let's talk about the biggest mistakes which first-time investors at the Nairobi Securities Exchange do make that should change their position in the market. By the way, in case you are new here, you are much welcome to my channel. My name is Afagzat Sifuna. I am a finance expert and qualified accountant, bringing you amazing videos daily about investing and making money. In case these are topics which you truly like, down there is a button called subscribe. Kindly click that particular button to subscribe to this channel, because when you subscribe, you'll be catching up on the videos I'm going to be uploading each and every day. And I'll still add it, drop a like on this video. Thank you for subscribing and also liking this video. Having said that, the very first mistake that beginning investors do make is that they get this investment thing all wrong. And when you enter the market on a wrong footing, that is when you end up selecting the wrong stocks and start experiencing pressures immediately. Most beginning investors enter the market with the mind of they want to make quick profit, quick return. That is not how the stock market works, because the stock market doesn't guarantee short-term returns. Yes, in the long term, you have the high possibility of you gaining in the stock market, but in the short term, the market doesn't guarantee returns. Yet, that is the mind with which most of the beginning investors jump in the stock market. And then, the second mistake most beginning investors out there do is buying given stocks because everyone else is buying. Maybe they have seen on Twitter or X people hyping a given stock. Maybe they have seen on a given Facebook group a number of people hyping a given stock. Maybe they have seen, maybe in a WhatsApp group, someone saying they're buying a given stock. They also follow that particular crowd or individuals to go and buy. That is not how the stock market works. You as an investor, you are responsible for your own investment. That is why you need to do your own research. And then, once you do your own research, both technical and fundamental, you can utilize that particular outcome to decide if to invest and to what extent. Don't just jump on an investment because everyone else out there is jumping on it. And then, the third mistake which beginning investors do in the stock market is chasing yesterday's winners. This is a very big mess. And I'm saying so because, to give you an example, at the NSE, in case a beginning investor has bought maybe security of maybe eGuards, they have bought, for example, shares of maybe EABL, they have bought maybe shares of Safaricom, they have bought maybe shares of Everready. In case Everready increased its price yesterday, this beginning investor might decide doubling down on Everready, thinking they're going to make more money. That's not how the stock market works. Yesterday's performance doesn't guarantee future performance. And that's so because every day, every hour, investor sentiments do change in the stock market. That is why your best bet is doing your own analysis, having a strategy, and sticking to it instead of trying to chase yesterday's winners, because that's the easiest way for you to end up losing in the stock market. And tied to that, the fourth reason or mistake that beginning investors out there do make is ignoring the business which anchors the shares. I always say, as an investor, buy the business, don't buy a ticket. A share is basically a ticket to allow you entry in the ownership of the business. If you are ignoring or you don't understand the business, then why are you investing in the first place? Because you investing in what you don't understand is the easiest way for you to end up losing money. If I ask you, the stocks which you hold, do you understand the business behind those stocks very well? Do you understand how the business makes money? Do you understand the business competitive environment? Do you understand the current dynamics in the business? Do you understand their debt holding and so forth? In case you don't understand all these things, you are probably gambling. That's why, as a beginning investor, look at, first of all, understanding the business, what they do, and see if it aligns with what you're looking at. Because that thinking that shares are this side and the business is this side is not true. These are shares of a given entity. You are becoming part of that particular entity. So understand the business, don't ignore it, and that way you're going to be able to invest with confidence, okay? And then The fifth mistake which beginning investors do make is trying to get rich overnight. Unfortunately, this rarely happens in the stock market, more so for retail investors. You trying to get rich overnight is the easiest way for you to lose your money. Don't act emotionally and be impatient in the stock market. The stock market rewards patience, okay? And patience is rewarded over time compared to any technique which you can use at this particular point in time to try and make money overnight. That is why as a beginning investor, be patient. It's already been proven that patience does pay in the stock market. So be patient, and then over time, you're going to be able to make money instead of you trying to make money overnight, okay? And then the sixth mistake which beginning investors do make is investing without a plan. If I ask you, what is your financial goal? Why are you investing? What is your time horizon? Why are you selecting specific stocks into your portfolio? Do you have a portfolio plan for the kind of stocks you want to be selecting based on their risk profile, based on their potential returns, and so forth? If you don't have a plan, you are unfortunately planning to fail. Yes, you might encounter or bump into a few wins along the way, but then you will be working towards a very clear direction. And that is why, as an investor, even a beginning investor, begin by defining your financial goals, okay? And then based on your financial goals, you can determine the kind of asset classes you get into. If it's stock markets, jumping on equities, fair enough. If it's fixed incomes, fair enough. Start with a plan. And even in the stock market, have a specific plan which can assist you prosper. And then, the seventh mistake which beginning investors do make is that they don't think like the owner. For you to thrive in the stock market, you need to be thinking like the owner. Simply think long-term, be patient, and most importantly, utilize the power of compounding for you to be able to increase your position in the market. If you think like the owner, you're going to start very well and then grow your investment over time, as opposed to thinking short-term and acting in a rush way. Guys, those are 7 mistakes which beginning investors do make, and they end up shortchanging their position in the market. I hope you've learned a thing from this video. Cheers, guys, and catch up in the next video next time. Bye-bye.